Now, Japan's an accident waiting to happen, and the global recovery is still at risk. Just a couple of the observations in Fathom Financial Consulting's quarterly global forecast out this Monday. And here to take us through the rest, we've got Director Gabay with us now. Thanks very much for coming in. So, strong words on Japan.
Yeah, the Japanese situation has been like watching a slow-motion train crash for some time. They don't seem to have very many options, and they're releasing the latest round of policy stimulus. But the economy itself seems to be losing momentum very quickly.
And you said that you're concerned about the US, right? Why is that?
Well, we're concerned in general about the lack of traction in the global recovery. I mean, what we think we've seen over the last 12 to 18 months has been very concerted policy action by central banks. They got some bang for their buck. Equity markets in particular responded, but the private sector business community didn't follow through. So as soon as that policy stimulus started to wane, we've seen the recovery start to lose momentum, and that also goes for China right the way through to the US. So we are expecting another round, or QE2 as it's known, another round of stimulus, but we're concerned that they don't just keep doing the same thing over and over again, that they look for the causes.
That's what I wanted to ask you. I mean, given the effectiveness of the action we've had already from the central banks, what does that mean? What are the implications for QE2?
Well, we've been making the same argument, like a broken record, for 2 years. The basic problem is this is a banking crisis. It remains a banking crisis, and at its heart, it's about housing. And those assets remain at the core of what's troubling banks and their balance sheets. And that's what we think both the US and the UK authorities need to address head on.
So with that in mind, are you expecting further write-downs from banks in Europe and the US?
It's basically one of two. You have to do two things. First of all, you have to write down the losses. That's the first lesson we learned from Japan. Just trying to hold on for something better to come along won't work. The second thing is the banks need to be recapitalized. And far smarter people than I within the central banks can work out how best to recapitalize them. But so far we haven't done enough, clearly, because the banks simply can't lend.
So within your equity portfolio, tell me about your weightings.
Well, we're quite short equities. We've gone underweight equities and overweight bonds. We do see concerns about inflation, and we see concerns about sovereign defaults, but we think they're outweighed by what looks like to be a much weaker growth profile. So within equities, if there is a race at the bottom, the one we like the least is Japan, and the one we dislike the least is the US.
Where do you stand on inflation, deflation? Will inflation become a risk if there is indeed further monetary stimulus, or is that overblown?
We think it's overblown. You have to look at, I think some equity investors are looking at everything with one eye. So it's great news there's more liquidity coming without considering why. The reason there's more liquidity coming is we're losing altitude. The US and America and Europe have had core inflation stuck below 1%. There's a risk. I'm not saying it's a certainty, but there's a risk. A leg down, another leg down could see us dip below the zero line. So right now, deflation is the biggest concern.
Gabay, Director of Fathom Financial Consulting, taking us through the risks for the global growth outlook. Thanks very much. Good to talk to you.